on board. Ajith Kumar Rai, founder and chairman of Suprajit Group, joining us on the show right now. Hi, very good morning, Mr. Rai, and thank you so much for your time. Firstly, before I talk to you about your numbers, since you are a global player and drive majority of your revenue from the overseas market, help us gauge the implications of the tariff around, because there have been some concerns with respect to the demand in US and Europe specifically. Help us with some understanding that are you seeing any signs of moderation or delay in the fresh order from the clients in these markets?
Good morning, and thank you for having me on your channel. At the outset, I think the tariffs war has gone up and down. As you know, it was implemented, and then it was pulled back, and it is now at some kind of a standstill, hoping that in the next month or two, all the countries will sign or agree on certain trade understanding. So with that hope, I think at this moment from India, it is 10%. From our Morocco plant, it is only 10%. And, there's been some respite both in Mexico, Canada, and in China. So, it has gone up and down. That's one part of it. What we understand from our European as well as from US operations is that as of now, the implication of these tariffs hasn't really gone into manufacturing plants in terms of numbers, because most of it is on hold. So the manufacturers are still producing. My latest feedback I have from my marketing and business development teams is that generally speaking, the business is generally normal, except in certain pockets. So our offtake with our customers have not been affected so far.
So far, first you're sounding optimistic and then you're closing the answer with so far. What does so far mean?
It's a good point, Nikanje. But we are in such an uncertain world, you very well aware, and the overnight tweaks and tweets and sudden decisions. These are all very unsettling for global trade, and we work in that very uncertain environment. So as we see it, it is fine now. But if there's again going to be another change of stance, and tomorrow, let's say Europe or somebody doesn't sign an agreement, and again it goes up and down, there is going to be disruptions. I know it's not good for not only for us, for the whole world, but we live in that environment.
All right, but Mr. Rai, you were positive on the China market as well last quarter. So give us some understanding there. Is that momentum still holding up? And also with the addition of one of the marquee clients from the EV side in the OEM, for your SCD division, I believe is what you mentioned in the press release. Give us some sense that how significant the revenue contribution could be from this particular client, and are you anticipating and looking forward to more additions?
We had one of the world's most famous EV manufacturer as our customers. Today, I'm very happy to say that the best in class in China in terms of EV, they are also our customers. They just became our customers in this last quarter. It's been a very pleasant journey with them. In fact, they have large global ambitions. They're setting a plant in Hungary. We have a Hungary plant. So our understanding with them has been that we will be their global source. And we won, as we speak, multiple contracts for their China requirements. And we are pretty sure it will extend to our other plants elsewhere of the thing. So it's a big feather in the cap. It's a multi-million-dollar contract without going into the details. But the important point is that our global footprint of manufacturing in China, India, Europe, Morocco, Mexico, US has really given a confidence to our customers that Suprajit is the player to play with in terms of auto cables and cable related systems for their requirements for their world market. And whatever is the tariff that may be there in the world, or whatever will be the new norm going forward, I think we have solutions which will be the most optimal for our customers. I think that is our USP going forward.
I want to talk about Suprajit Controls division as well, because there your margins have dipped on a sequential basis but stayed in double digits. Tell me what's behind the drop, and do you expect the margins to improve going forward?
See, on the Suprajit Controls division, for 2 quarters, we have hit double-digit margins. In global business today in auto components, I mentioned it in earlier conversations that between 6 to 10 is a good margin, 6 is not so good, 10 is good. So we have already hit that double-digit margin. Global businesses are not beyond that, unlike probably in some niche auto component businesses in India, like our cables division. So I would say we are already there in the sweet spot. It is a very consistent performance of Suprajit Controls division. But what is really heartening is that going forward, that division, irrespective of these world's up and downs, will have a double-digit growth with the consolidated margins at these numbers easily and probably more. I think that is what is the real story of Suprajit going forward.
And the second tranche of this SCS acquisition, that was earlier expected to close by, I think, the first quarter, but seems a little bit delayed. Any timeline that you have on the same?
I think it's actually any time. We have sort of said that it's taking little time, but that little time is now really little. As I see it, maybe a couple of weeks at best, or even earlier than that.
What about your electronics division? I wanted to understand a little bit about that as well. Given that the share of EVs is increasing, tell me, what are the order inflows and pipeline like?
In the EV space, there has been actually a lot of upheaval. As you know, there was absolute leader a year ago, but today there are 4 people vying for the top 4 spot. The leader has now dropped to 2nd or 3rd place. So there has been very much up and down. It's one of the EV players. We had a significant business. We continue to have a significant business with them, but the volumes have significantly dropped for that particular customer. So that has been a kind of a step back for us. But what's happening in the electronics division is that because of our global reach, we have been able to use our electronic components in our global supplies to customers. To give an example, on the actuator, there is a very important PCB which was supplied by a global major, and there are a lot of supply issues from them, and we have been able to replace that global supplier both in our Matamoros plant as well as in our Hungary plant. So that means to say that our electronics division has gone beyond domestic two-wheeler EV to a global automotive, as well as we have got a couple of non-automotive businesses. So I think that has really been the story of Suprajit Electronics division. Yes, last quarter, because of this one particular EV manufacturer dropping the volume significantly, we did have some impact.
Lastly, Mr. Rai, if you can help us with the latest number on debt, because in the last quarterly earnings, I believe that the number stood at 627 crores in terms of your consolidated debt. What's the position now, and where do you see this number headed?
Our debt has not increased. I think we're at about, as you rightly said, about 630 crores last year, and as of March, it remains at 630, or plus minus 5 crores. So our debt has not increased at all. It's in the same level. And end of this financial year also, we don't see our debt levels going up for sure. It'll probably come down.
All right, appreciate your time, and glad you could join us with
Nikunj.
your thoughts. Thank you very much.
If you like this video, then like, share and subscribe to ET Now.